I want to welcome you today. We have a lot to talk about when it comes to what's happening in the world and how it may impact your investments and financial planning. Now, with all the recent global events and the market turbulence that's out there, it's really important to stay informed and focused on strategies that can enhance your financial well-being. Now, I say this a lot, and for the most part, I've been actually saying it for the last number of months, that there is a lot going on out there with things happening around the world. There are a lot of issues that can really affect our economy and the stock market. But here's the thing. Yes, even myself, I have been really dour lately, and there's been a lot of things that are cropping up that are causing risks to happen fast. But I wanted to take today, and I want to just twist that around a little bit, and I want to talk about some positive aspects and a positive approach that you can look at for some potential opportunities that are out there. So yes, there are challenging times, but we can focus on opportunities as well. So when we take a look at our first section, the economic and stock market risks, I want to change that around. So we're going to be talking about economic and stock market opportunities. Now, I'm sure that you have been concerned about the recent events around the world, such as the Israeli and Hamas war, the Ukraine and Russian war that's going on, not to mention the ongoing economic recessions that are really happening in various industries. Well, we also take a look at chaos in the housing market and the bond market. So yes, it's a lot to digest, but I said I wanted to focus our attention on something a little more optimistic. That's what we want to be working on. The concept of the stock market seasonality. Now, here's what this really involves. It's directly related to global, not hardships, but opportunities that are out there. And in fact, it traces its roots back to the early days of the stock market and the publication of the Stock Market Almanac. Now, here's the history lesson here, that August, September, and October really tend to be the worst months for the stock market. So yes, it's nothing out of the ordinary that what we're seeing right now is something we've seen before. And this happens generally on a year in, year out basis. And industries like technology, home builders, semiconductors, they're all facing challenges. And then when we add in the leadership role of the energy sector right now, it actually all starts to make sense. However, we need to keep our eyes really on the next few weeks. You see, what's going to happen here is that this is a very crucial time. And just like, and you may have played it, Texas Hold'em poker, there's the river card, and that can reveal a lot. Now, here's what happens. If the markets start turning higher from here, the US dollar start weakening, and bonds becoming more attractive, we actually just might witness a strong year-end rally. So that's really something to be considering here, that's another positive aspect that we can really see with the historical nature. And the third year, right now, of the presidential term is actually great for the markets historically. So yes, if that all shapes up well with a year-end rally, we could definitely see hope on the horizon. So yes, we're keeping a close eye and monitoring these next few weeks, like I said, because this is going to really be the tell if we're going to see this really seasonality effect start to happen and a positive news for the stock market and signs emerging that we can be ready to seize those opportunities as well. So let's take a look at our second element, portfolio changes. Now that we have talked a lot about some opportunities that are out there, let's talk about some strategic changes that you could be considering for your own portfolio. Now, we always aim to adapt and make smart adjustments based upon the evolving financial landscape. That much is true. And yes, we have been talking a lot about some opportunities that are out there, but I also want to remind you that those 1 to 3 month treasury bills that we've been talking about have actually been performing exceptionally well right now. Now, to keep with that, and that theme that's out there, there's even another investment that really a similar time frame, about 1 month to 1 year, that could also really help as a diversifier and to help manage the risk that's out there and to ensure that you're on the right track. So yes, we did, like I said, want to talk about some opportunities, but this is a great opportunity to do both, to grow with dividends, but then also to be trying to manage the risk as well that we could be seeing. So that's one element, but in addition to that, we can look at some other short-term bonds and some bonds that are going to really work with what we call a steepener effect. Now, this is where certain elements of the bonds can really capitalize on the changing bond markets that are out there, and especially with the yields. So here's really the concepts behind this, that we have a slowing of an economic growth and a rising really inflation. And this is our lead 3 environment that we're experiencing right now. So what this really does then is the steepener is designed to take advantage of the bond curve. So the bond yields, the curve, right now has been inverted, and we're starting to see that come back to normal. So this will take advantage of that return to normal. And then when we take a look at different elements of alternative investments, now that's something that we're not really talking about, say, real estate or private equity. No, we're talking about alternatives that are acting as a hedge against the economic challenges that are out there. And these are ones that can go what we call long and short of the markets. Now, they could also benefit from a potential year-end rally that we've been talking about, and something that could really be that seasonal effect, but they could also help with any downside work that the stock market may do as well. So yes, whether it's the hedge funds themselves, which are going to be hard to get into, and they are very intensive with not only fees and structures, but we can have some great alternatives out there, not only to hedge funds themselves, but ones that can actually really act like them and go really on the long side, maybe 130%, on the short side 30%, and those can be some great alternatives to say, how can we capitalize in this environment? So those are some things that you can be really considering for your own portfolio. Now, yes, they really help to make all of these adjustments work into and align with your current financial plan, as well as the risk tolerance that you have. And as I said before, the global uncertainty that's out there, it's still there. And yes, we want to be opportunistic here, but there are going to be times that if the worst happens with the world and some of the wars, it could actually lead to a significant sell-off. And what we want to be aware of here is that nothing may work when it comes to this type of environment, and everyone may be rushing to the exits to sell their assets simultaneously. Now, we're keeping a close eye on this, obviously, because we want to be making sure that that scenario, if it happens, that we let not only our current clients know, but we also want you to know about this as well and be ready to adapt to protect your assets as well. And that leads us to number 3, wealth management and advanced planning. Now let's shift our focus to a crucial aspect of your financial well-being, and that is growing your wealth, but also making sure that we preserve it and ensure your assets are passed on according to your wishes. Now that's what we call wealth transfer, or you may refer to it as estate planning. And again, this is really, like I talked about, the process of transferring your wealth to your heirs and other beneficiaries. Now, the critical components here are that it really involves your overall financial strategy, and it not only empowers you to decide how your assets are going to be distributed, but it will help to minimize state and federal taxes and the implications that they have as well. So that is one element here. But yes, you may not be subject to federal estate taxes right now. You may not even be subject to state estate taxes right now. But here's the different elements here, that even if you aren't subject to the estate taxes, or you may not have immediate family, estate planning really enables you to determine who will receive your wealth when you are no longer here. And failing to plan in this element can really mean that the government ends up making these decisions for you. And we know that rarely that's the ideal choice here. Now, yes, there are some things in place here, and especially if you have an existing estate plan, it may not be effective as you think. In fact, really a substantial number of estate plans are more than 3 years old. And that is actually a critical number. We used to talk about 5 years or 10 years old, but even now, with all of the different tax elements that are cropping up, with the changes of the tax code that's happening on a yearly basis, 3 years is something that we really need to be considering. And this is a red flag if we're more than 3 years out for several different reasons. Well, first off, changes in the tax law mean that an older estate plan may not be taking full advantage of current opportunities to transfer your assets efficiently. And like I said, tax laws really have changed and can render certain aspects of the older estate plans ineffective. Now, I'll give you one example here. When we were talking about just really a couple years ago that we could do some stretch IRA planning. Well, new laws have really done away with that. And if your estate plan is trying to take advantage of that, you actually may see that it's not going to happen the way that you wish. Now, additionally to a lot of the changes that are out there in your wealth status, your personal situation, and even your family dynamics come into this, and it might make your existing plan less suited to your current and future needs than you think. So to maximize your benefits, and really the estate planning piece of it, is essential to keep up on your plan and to really revise it as necessary. Now, yes, we are here to help to ensure that your estate plan is really tailored to your unique circumstances and goals, and then work with the specific professionals to make this happen. So yes, it's an ever-changing financial environment. It's an ever-changing tax environment. And there are changes to the tax code that may really impact your overall financial status. But we really want to make sure that if we keep on top of the financial and the estate plan, that you can have the insurance to know that your assets are going to be transferred to the intended people at the correct time with the least amount of tax impact. Number 4, our second opinion service. As we've discussed, managing your wealth in a consistent, ever-evolving financial landscape is crucial to stay up to date on making informed decisions. Now, this is where we can come in to assist you in this endeavor, and we will offer you our valuable second opinion service. Now, what exactly is this? Well, it's a comprehensive financial review that starts with a discovery meeting. And then we go deep into learning not only where you're at today, but where you want to go with your goals and any concerns that you have. Now, out of this, there's going to be a couple different elements. Either you're going to be in a good place, and we'll let you know that, or there may be some elements and some gaps that exist that need to be addressed. Now, here's where it gets interesting, is that when we start to address those concerns and fill those gaps, we can be really providing you with a tailored strategy and really ideas that are going to connect with the issues that you are most worried about. Now, that is why you should be considering a second opinion service, but there's a couple other compelling reasons as well. The first one is objectivity, because what we will do is offer you an objective and unbiased assessment of your wealth plan. And this is where we can provide you with a fresh perspective to ensure your wealth plan aligns with your goals. Now, another element here is that you can have confidence, because having an experienced financial advisor examine your plan with really all the ongoings of the tax market, ongoings of the stock market, all these different elements, it can help you make the best choice about your financial future. And that's what we really want here. So that's the different elements of the financial plan as it relates to the second opinion service. Now, yes, there are some other opportunities that are out there, and the action that we can be looking for is to identify and improve all the different aspects of your overall wealth plan. So if you would like to really take a look at this and learn more, feel free to reach out, because our team is here to guide you through this process, and we're going to offer you insights and strategies that are tailored to your unique financial situation. So please get in touch with us. We'll talk a little bit more about the financial plan service and see what is right for you. With that, take care.